What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house. It's going to be torn down soon.
I understand that there are power lines that are getting kind of close.
What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Mike, and Desrosiers is how I'd take a stab at it, trying to anglicize the French there, but how'd I do?
Oh, excellent. Right on. That's
Awesome,
it.
awesome. And I got some great news for you today, Mike. We are joined. I don't know if you were aware of this, but we are joined by my very favorite member of the audience. And why is my favorite audience member here? Is because this is a chance encounter where I talk to commercial real estate players. That means deal sponsors. That means buyers, sellers, investors, operators, all that kind of stuff. And you may sit there and ask, why would you do that? And the answer is, if you've ever heard of an off-market deal, the private deals that you're not allowed to talk about to strangers, well, then you should probably know that the SEC requires that you have a documented prior substantive relationship, or else they'll get ants in their pants, and we don't want that now, do we? So I have people on here, and we talk about level of sophistication, appetite for risk, core competencies that they're going to contribute, which I know that doesn't sound too exciting, but the benefit to you is that you will learn how to more effectively communicate on the subject of commercial real estate deals, and you'll better understand how my guest fits into those. But before we talk too much about real estate specifically, Mike, do you want to say a thing or two about yourself?
Sure, Dan. I appreciate you having me on. I always look forward to talking to an audience in the real estate world. It's my favorite subject, obviously. But I am a real estate operator, a syndicator. I'm a general partner on a little over 2,000 units, mostly in the Texas market, as well as Las Vegas and Kansas City. I live on the West Coast in California, but with some single family that I've had here for quite some time. But most all of my investments are out of state. I definitely focus on more emerging markets, landlord-friendly states. That kind of gives you a little. Doesn't guarantee any success, but certainly gives you a little feather in your cap and helps you navigate, this kind of vast world.
I love that.
I enjoy it very much.
All right, sweet. So the first segment that we go through in these chance encounters, it's the 5 distinct motivations. Before that, I always say, but wait, check your rate. Mike, I don't know how you are with technology, but maybe you can see through your camera and down there into the user's device. And be careful, though. They might have this hideous subscribe button down there that they might want to... Okay, yeah, it's not so subtle. Whatever. The 5 distinct motivations. At this point, I've literally spoken to hundreds and hundreds, possibly even like over 1,000 different commercial real estate players. And one thing that's really important to know if you have a chance of doing business with each other, it's what's their motivation? What's going to keep them from throwing in the towel, especially seeing as though these deals can take months to close, they'll take years to go full cycle. And even though everybody has their own unique why, I find that they fit pretty neatly into these 5 different categories, so I go through them in every episode. The first of which is preservation of purchasing power. What on earth is that? Well, some people, they are job optional. They don't need to work, and the way that they pay their bills is from the proceeds of ownership. They have a portfolio of assets, and those profits are how they make their money. So if you're in that situation, it seems like you'd want to take it easy all the time and you wouldn't bother going through the hassle of a new acquisition. But there are a couple situations where you'd absolutely be motivated to do so. The first one is when inflation is rearing its ugly head. That's going to eat away from the purchasing power of your cash flow. So it's going to be time to pick up another asset. And then the other circumstance is if there's an asset crash, or you're basically aware of a distressed property where you can buy it at a steep discount, then it's going to make sense and be worth it. And to be brutally honest, I'm not to that point in my real estate career yet. You know, everybody has to try and buy at a discount, but I'm not so much about preservation of purchasing power so much as trading time directly for wealth instead of high salary, high wage. My background is in technology. I opened up a CRM agency back in 2011, and I started working for real estate companies back in 2014. A guy who was flipping 10 houses a month, he ended up hiring me on. I was handling all his CRMs and online funnels and credit card transactions, all that kind of fun stuff. And what hit me though is the tax burden is absolutely enormous. And I saw how much my old boss was making, and I could not help but think, how do I pivot where instead of receiving more and more in salary, I'm getting rewarded in the form of deployed capital, aka equity. So that's what brought me into this industry. And of course, that's a little too subtle for some people, especially youngsters. Youngsters who come into this industry, they're frequently interested in hustling like crazy for now and then fast tracking retirement, or at least some form of wanting to take back control of your schedule and basically decide when you work and when you don't, maybe fewer months per year, fewer weeks per month, something like that. And one thing that's a little bit funny about this particular motivation is a lot of people who have it as their main motivation think that it's secretly the motivation of everybody, and they're just in various levels of hiding it. But I assure you that's not true. For example, some people are fueled purely by ambition for that generational wealth. They want to make sure that their great grandchildren never have to hold a day job, so they're trying to buy up their entire hometown, which is sometimes vilified in the media and whatnot. But the fact is, you need people who are willing to hustle into their 90s, because those are truly dependable people. You know they're not going to throw in the towel. They're going to keep on working. So I think that it's kind of an unfair assessment as a whole. But other people, they're going to stick with it, also hustling into their 90s, not so much for their own generational wealth, but it's because they've picked a sector of society, or maybe it's animals, maybe it's the environment, something like that. But they realize that there's a financial component that comes with trying to make that kind of big impact, and that's why they're making their commercial real estate acquisitions. So Mike, of those 5 different motivations, what combination of them would you say describes you best?
It is a combination of all of them. Those are all terrific motivational points, and it's great that you bring those up like that. I like that. For me, I've always been an entrepreneur. I've been in business for myself pretty much my whole life, in different, all kinds of different types of businesses. Most recently in the advertising and marketing promotions business, right? And everything's kind of been related to that. But an interesting story that I like to tell is that when I was very young, I was still going to college, and I started a business during that time, and I was looking to rent my first office space. And this was in the food business and frozen foods. And I ended up renting a mini storage, right, to run my business out of, because it was really just about putting freezers in there and, that kind of a thing. So it was like the least expensive office space that I could get, right? And but I remember the owner of the mini storage, I remember talking to me, and he was an older guy, probably my age now, but at that time he was very old. And he said to me, he said, I love a young entrepreneur, starting out. And then he tells me the story about being an electrician for 40 years, and he worked, every single day and worked so hard. But it wasn't the electrical business that made him the money at the end of the day. It was the real estate that he bought on the way, right? And that was his point that he was telling me, is buy real estate.
Yeah.
Sure enough, I can say the same thing, because I have been in many different businesses, and it's created a good life for me, vacations and trips and houses and things like that. But it's the real estate that I bought along the way that today is really created my net worth. And And then, and I wasn't into multifamily back then, right? This was just single family rentals, having a rental. I always had a rental of some sort, one type or another, and doing some single house flips. And then getting drawn into the multifamily and the syndication space where you can actually raise capital using other people's money, and actually even buying out of state for Californians. That's always a kind of a big, like, scary thing, right? It's like, I'm going to go buy something in Texas and I'm going to run it from California. How am I going to do that, right? But learning through this education did teach me to do that. So it has put me into a position where, my income was generally coming from this other business, and then it just kind of slowly shifted over. And now my income pretty much 100% comes from the real estate and from the holdings that I have. And so and it does never stop. There is no such thing, right? I mean, in this business, you have to kind of just keep going, and you navigate the waters, and using your experience in education or other people's experience in education. That's another terrific thing about this business, is that there's so many, coaching programs and mentors out there, and just people that are willing to help you, right? And even people like yourself that are doing a podcast that is educating, listeners out there. That's an amazing thing, right? You don't see that in, like, us in the advertising world, right? You would never see a bunch of advertising people sitting around a table sharing ideas, right? They don't do that because, it's going to be on the internet, but by the next day. And, ideas are very secret, and ways of doing business. But in this business is very much giving, sharing. And that's one of the things I really enjoy about it. I do enjoy helping others, grow in this industry. It's a lot of fun. So I'm not sure if that answers the question, but I think
Yeah, I think it
so.
absolutely does. And it's refreshing to hear, you say the same things, like coming from tech, and then also like how that blended into marketing. Yeah, I absolutely agree. You keep your secrets to yourself, and yeah, you don't have that encouragement like you do in this industry. And of course, when we're talking about motivations, it's really, really easy to sound overly optimistic or even naive, but there are risks involved in every single type of business. And of course, real estate is no different. Now, if you've ever been involved in an off market 506B syndication, then the securities attorney in the mix should have insisted that everybody fills out this super invasive financial questionnaire. Sometimes it's called a suitability questionnaire. And when I went through those investment questionnaires, I found one question in particular, it lacked utility. I felt that any of the answers that somebody could choose, it doesn't really give me the information I'd need to really understand where somebody is. And it was the tolerance for risk assessment question. So of course, I made my own one, and it's a fill in the blanks question. It is, there are many popular investment asset classes, but I think blank is too risky. So Mike, it can be inside real estate, it can be outside real estate. What's too risky for you to invest in?
Yeah, great question, and great subject too, because that's also something that's not really touched on a lot of these podcasts or educations. The 506B or C, that's very important. But for me on this question, probably not a popular answer with a lot of people, but for me, the whole Bitcoin thing is just untouchable. I don't know. That's just, maybe it's my age, maybe whatever, but it's not, to me, it's not tangible. It's not something you can touch or feel, or, stick in your pocket, or put in your backyard or anything. Right. And it just, for me, it's something that seems like could disappear like in a, blink of an eye. And so it's too risky for me.
I love that answer, and it's really funny because, like right now, it's the 1st of March in 2024, and crypto's been a pretty big punching bag for a while. In the last month, though, it tripled in price again, went from
Yes, it
about
has.
21K to like 61K right now, last I checked. So,
That's right.
but at the end of the day, it's an appreciation move. It's buy low, sell high. If you can't do that, you lose money, full stop. And whereas
Yeah.
in something like real estate, you've got that cash flow that ought to be coming in just because you own it. So it offsets the risk of, hey, what if I never get my capital back at all? So I always love using crypto as a punching bag for that. And being a
Yeah.
tech guy, it's not like, oh, I just don't understand it. It's, no, I get it. It's kind
Yeah.
of fun. But
Yeah,
anyway,
and with that said, I'm gonna say I have invested in it. I haven't invested Bitcoin direct, but I've invested in the Bitcoin mining
mhm.
operations, and just more about the interest in the education part of it. But I guess it's kind of like gambling money, right? So if you have that to spend, it's totally fine. Like going to, the crap tables or blackjack or whatever, right? But then again, a lot of people have made a lot of money at it too. So, and I'm sure they'll continue to do so.
Absolutely, absolutely. And when it comes to the numbers themselves, I got to tell you, this next question that I have here, when I first started doing the chance encounter interviews, I wanted to do something like this, but I avoided it because I know that some people in this industry, they're more of a public relations role or a marketing role, the front of house sort of thing. They're not the ones who are doing deep dives into the spreadsheets up to their eyeballs in these numbers. But I want to make sure that if you're involved in deals, then you can communicate effectively with whoever my guest is. And what better way than to focus on the metrics that they use to decide on if a deal is worth pursuing or not. And for anybody in the audience who is only listening and not watching, I'm careful to read out all the ones that I have on here. This is not an exhaustive list. There's others. I've already had about 2 or 3 other metrics brought up by guests, so I highly encourage that. But the ones that I have on here, for example, are cash on cash, IRR, cost per door, net operating income or NOI, the going in cap rate, which is really talking about the difference between what the standard, like the going rate for a cap rate where the property is located in versus what you're paying for it. The loan interest rate is going to be very important, especially if you're going to be assuming a loan. The occupancy rate, which is the inverse of the vacancy rate, but it's the same thing. The average income where the property is located, the amortization period of the loan, the difference between the market versus the in-place rents, the population growth where the property is located. So you got some baked in appreciation right there. The sponsorship record, which is how many deals have already gone full cycle, how many are on the go right now. The waterfall split or exit strategy, which is about what happens after your capital has been returned. And then the last one I have listed is the DSCR, which is the debt service coverage ratio, which is how much of the revenue from rent is going out the door right off the bat to your loan costs. So Mike, again, you're free to pick any other metrics, but what's your top 3 or something like that? What are the big ones for you?
Sure. Well, obviously, these are all terrific bullet points there, and all things that I take in consideration into a good deal. I look at every single one of them, no question about it. But a lot of them can be variable depending on what market you're in, what asset class you're in, if there's a value add component or not, and that kind of a thing, right? So it can change which one is kind of more important. But the one that sticks out on the top, which is on the top, is the cash on cash. And honestly, if you're in it, if you're looking at the cash on cash and the cash on cash is good, you're in a solid deal, right? And it may not hit it out of the park. Maybe it's in more of a flat market or an area that doesn't necessarily appreciate so much, or maybe it's not in a really fast growing market, but you're making money and your investors are making money, and that's kind of number one. At that point, you can hold it for a short term or a long term. All these other metrics, cost per door, cost per door can be in Tennessee, where you could find something at 50,000 a door, and you can go to San Francisco and it costs you $1 million a door, right? So it's all irrelevant, right? Depending on what you're doing with that property and all of that. But and same with kind of going in cap rates and all of these things. You put them all together and you can analyze a deal really well and come up with something that shows a very good projected profits, and that's really the important thing. But the cash on cash, I think, is number one. And sometimes it's not cash on cash day one. It's like, if I buy this property today, what will the cash on cash be, say, in 6 months or 12 months after I purchase it? Can I get it to a point where it's really going to be cash flowing, and how fast?
I love it. I love that answer. I'm eating it up like a delicious subscribe sandwich.
Love it.
Yeah, it's very subtle. You know, I like to keep my reminders to help out on that. You know, pretty evident. But it also tells me it's time to pull out the Dan Does Deals Commercial Core Competency Cube with the 6 different roles in a commercial real estate deal. And the reason why I go through it is, once again, I find that your career, your future in commercial real estate is going to hinge on your ability to effectively communicate on the subject of a commercial real estate deal. And this part here is to talk about the key roles. If somebody's missing from the deal, then that spells trouble. And so I go through each of these in every single episode. The other benefit, of course, is it allows you to express how my guest fits into these deals and understand it. And if you're looking at this cube and going, wow, I really need me one of those, well, the good news, it's completely free. You go to dandoesdeals.com, there's this big conspicuous button, you just click on it and download it. And since we were talking about marketing earlier, I should confess to my cardinal marketing sin that I committed, which is, whenever you give away a freebie, you should always ask for some sort of contact information, like an email address. And I didn't do that because it's that important to me that nothing stands in your way from getting this, printing it out, and practicing explaining this stuff, because again, your career is going to hinge on it. So let's get started. We'll first talk about the repositioner. The repositioner is the most visible person in a commercial real estate deal. They are the acquisitions people. So their job is to look at a whole whack of different properties to find that diamond in the rough, find that best opportunity. And the only way that they can know if it's a diamond or a not diamond is to do a bunch of paperwork. So they're underwriting the deal. That's the fancy word for doing the math. They need to first of all figure out whether or not the property is actually even making the amount of money that the broker slash seller claims it is, because but I call them repositioners because they're figuring out how can they change how the property is run to find more upside. Now, the most peculiar part of being a repositioner is that every repositioner has to do financier relations. They have to have a big network of financiers, people who only deal with paper and money and the owners of the property. And the idea of why you need so many financiers is because if the repositioner can secure a more advantageous loan, the property is automatically more profitable just because of the cheaper money. So that's why they need to know all sorts of financiers, even though the financiers are not going to be GPs on the deals. The next place that the repositioner is going to look is operations. They're going to say, hey, how can we stop all these Benjamins from going down the toilet? But of course, there's a lot more to operations than just unclogging toilets and collecting rents and mowing lawns and shoveling snow where I live. The contributions that I bring to the table to a GP team when I'm on one is, one, there's all the automation and web-based applications that I can put together for the team. But the one that's even more important, especially when you're dealing with bigger deals like I do, 100 units or more, then you're probably outsourcing to a third-party property management company and paying them that way. So it might make you wonder, well, what kind of role can you actually have remotely? And if you understand that in this business, vacancy is the real enemy, okay? Empty units is what's going to actually kill deals. Then you realize that somebody on the GP team is going to have some serious marketing chops so that we can step in when we have empty units and get them filled. So that's where I fit in. But of course, there's only so much you can do with operations as a repositioner. So the next tool in their tool belt is they're going to get a contractor team involved to upgrade the property. If the place is nicer, the future residents will be happy to pay more in rent than the previous ones. But if only it were that simple. You can spend endless amounts of money on contracting. You can go ahead and gold plate the toilets, but you're not going to get a return on investment. But that's not the only way that you can lose money off of the contractor team's involvement. For example, they might be dragging their heels. They might be using subpar materials. And so what are you going to do? Well, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or two, because categorically, that will not be me. I'd still be stuck at an airport in an hour or two. So we need somebody else who's going to be there making sure the contractors are staying on schedule, using the right materials, making sure the operators aren't sloughing their photos, giving inaccurate information, all that kind of stuff. Basically making sure that the investors are in good shape. And speaking of investors, let's do a hypothetical. Let's say you get into commercial real estate and you become a repositioner. Let's say you're an engineer or a physician or an attorney, something like that. And you get the idea in your head of, hey, I know how to buy a house. You put down the down payment and then you borrow the rest. So I bet if I get my circle of friends, we put in 100K each or something like that, we could buy that 350 unit apartment complex that's just down the street. So you turn around to the financiers, the banks, you say, hey, I really want to buy that building over there. It's tens of millions of dollars. Do you have, I don't know, say tens of millions of dollars you want to lend us? Well, there's a problem with the little plan right here. And if you're in a mentorship program or you have a guru or something like that, I highly encourage you to listen very carefully to this next part, because they're going to ask, who's your sponsor? Who's your KP? What's that all about? In order to be eligible for a commercial loan, you need somebody in the fold who already owns a similar asset. That's because they want to make sure that you're not going to run the property into the ground. So you need to have somebody who knows what they're doing, or that the bank will accept. On top of that, among the GP team, you need a certain amount of liquidity. And then for the collateral, you need a balance sheet of at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. So Mike, you mentioned a few of the different roles that you're going to be involved in, but I don't want to put words in your mouth. Which roles are you most likely to contribute to your next deal?
I came in. It's interesting. I've changed roles as I've gone through, multiple deals, and being in almost 12 different deals now. So, yeah, what was interesting is when I first started out, I thought broker relations was going to kind of be my lane, but then I realized how much time and effort that takes. Those aren't quick phone calls, and it's a lot of, it is a lot of nurturing that goes on. So I came in, actually on the capital raising side a lot, but my nature is to dive in to any of the roles that need the attention. So now I've pretty much done most all of that. Currently, I'm working on finance, being the financial person that's working on the loans and the broker relationships with lenders, which is obviously a big thing going on in the market right now, which has been great. I love education. I am a sponsor. I'm a KP on most of my deals. I'm a loan guarantor. I come in and sponsor with students that come through some of these education networks that I'm involved with, and I come in as a KP to help them get into their first deal. I do some asset management on some of the deals. You can't do it on all of them because takes a lot of time and effort. And I even work on some of the, I don't do the construction, but I help kind of manage some of the quotes and construction people that are coming into the properties that are doing renovations and so forth. So I do kind of wear a lot of multiple hats, which I think you need to eventually. And you start in one lane, but you need to expand that out to multiple lanes.
Excellent. So let's talk about the buildings themselves, the buy box, the ideal property. And when real estate people are asking each other, hey, what you looking for? What's your buy box? We're asking for three main things. First one's geography, and Mike has already mentioned a few details of his geography, but what I'm talking about is which states, which counties, possibly even which neighborhood. Okay, the location is definitely going to matter. Second one's going to be size, and most of my guests on this show are in multifamily, and the way you define size in multifamily is by the number of apartment units. It's really pivotal for a couple reasons. We need to know what the ideal size is, because the type of group that's going to take over 10 and 15 unit apartment complexes, they're going to be fundamentally different from the ones that are taking over 150 and whatever unit apartment complexes. And I say it's vital because, well, that's part of the idea of not doing single family rentals, is that you're basing your income off of many residents and mitigating a little bit of the risk that way. Now, of course, other forms of commercial real estate, some of them go by acreage or square footage or whatever, but for the same reasons, the size is going to matter. Now, the third one, though, is usually called class. I prefer to call it desirability because it's clearly two completely separate things. The first one's condition, the second one's area. And when you're talking about condition, it's how old is the building, how beat up is the building, what sort of luxuries and amenities are there, or are there none at all. That's the condition. But if you're talking about the area, especially if you're talking some form of residential real estate like multifamily, the school districts where the property is located is going to be very important. But every kind of real estate is going to hinge on the crime rate where the property is located. And then the third thing about the area, it's the old saying, location, location, location. I don't like that trope because I don't think it's very informative. What they really mean, in my view, is traffic, traffic, traffic. If a gazillion people are passing by a property every single day, it's going to be more desirable just as a factor of that. But both the area and the condition are ranked the same way as in grade school, where you have A plus at the top, then it's A, then it's A minus, then B plus, and so on. So Mike, as far as you and your organization goes, what's easier to say yes to these days?
I take all of that into consideration for sure. Size-wise, we do like the larger properties primarily for the reasons that you said, right? It's just you're dividing your risk over 100 units instead of say 20 units. If you have a 20-unit property and you have 5 vacancies, right, you've got a 25% vacancy. And if you got a 100 unit with 5 vacancies, you got a 5% vacancy. And it's quite honestly, it's easier to run the larger properties than it is the smaller. It attracts, you get a much better property management company, right? Property management companies that manage 100-unit plus property are usually going to be a much higher caliber. They come with a lot of processes and systems in place. They come with a whole staff of people, many people that can come in and jump in when something, somebody quits or somebody doesn't show up, they can replace them. They have usually a whole, a Rolodex of, contractors and people that can come in and fix things, whether it's plumbing or leaky roofs or, construction. And again, I like to say is a good property manager comes to you with solutions instead of problems, right? Instead of calling you and saying, oh, we had a fire in unit 1 or something. What do you want to do, right? They come in and say, hey, this happened and we've already got people on it and this is how we're going to fix it, right? And that just makes it much easier to operate, usually a much smoother. As far as location goes, I mentioned the areas that I do operate in mostly, but I am open to other markets. I'm looking in the Tennessee market. I'm looking at the Phoenix market. Florida market, I'm carefully in there. It's grown, dramatically, but I'm still interested. And even in the north, even in the Northeast, right? So I go where I feel I look for things like population growth and job growth. I think those are two of the most biggest indicators that just show that people are going there and that they're going to continue to go there and there's going to be a need. Landlord-friendly states, of course, makes much easier to do business with. And something that's in the path of progress, right? That's the other part of it. You're looking for some of these key indicators that just says that, hey, things are happening over on this side of town, or, this is where the growth is going on and they're, building or they're adding here, or they're, the city economic development department is focusing on this and, gentrifying a certain neighborhood or things. Those are all great indicators that help your buy box.
Mm-hmm. I love it.
Anything. Classes, I definitely like in that B class space. A is beautiful, and I do own some A, and has done well, but you don't necessarily have as much room to grow there. And the B, you have a C on one side and A on the other side, so you have room to grow no matter kind of where the economy is, and people can either move up or they can move down. But when you get on the other ends of the spectrum, it's less opportunity for them.
Mm-hmm. I love it. You got all the points there. So that brings us from the deals themselves to people. And Mike already mentioned about the community that we have here in commercial real estate. We're so eager to introduce people, to make referrals. And it's because nobody can be all 6 sides, all 6 roles of a deal for any meaningful amount of time. So it's important to be building those teams constantly. But at the same time, because we have our own unique skill sets, we're better able to help some people more than others. And with my background in technology, and now of course also in the lending side that I'm getting deeper into, I find the sponsors and KPs are the people that I can help disproportionately more. I find that a lot of the people, when they're just starting out as locals or as repositioners, they really need people who can put in 80 to 120 hours a week. And that's simply not how I'm at my most effective. That's not how I'm making the biggest difference in the bottom line. So the sponsors and KPs, I'm always eager to talk to. And of course, everybody, they're in the business of deploying capital. So financier relationships are really pivotal. But Mike, as far as you're concerned, who's out there in the audience that you can help disproportionately more?
I'm always open to sponsoring deals and KP on deals. So I do like boots on the ground and at least somebody on the team to have boots on the ground, because I'm in California, so I'm obviously not. Although I do travel quite a bit to the states that I have properties in. But yeah, as you said, in an hour, I can't get farther than the airport. That was it. And so I'm not going to get to the property when needed. Not that that's typically needed. That was one of the great aha moments that I learned in coming up into this, is that you don't necessarily need to be there. But once in a while, and it's also a very, just a relieving feeling to know that there is somebody there just in case, right? They could go drive by at night if there's some problem going on or some suspicious of something. They could go by and see construction happening, casually come by on a lunch break and just see a renovation being done, or a major, the people are actually on the job. Those kinds of things are helpful. So, I like to talk with people that are getting into deals. I'm happy to look at deals. And I may or may not be interested in sponsoring them, but I'm certainly always interested in meeting other individuals that are either coming up the ranks here in this industry or learning it. And I enjoy that part of it.
I love that answer. And so I'm sure there's people in the audience saying, hey, I really need to reach out and get in touch. And of course, I need to hijack the conversation, talk about myself for a moment. And so I've got this really distinctive last name. It makes me super easy to find on LinkedIn.
Yeah, me too.
Exactly. So that's where I spend most of my time. So catching up on LinkedIn is probably the best way to do that. And of course, if you're in a book buying mode, I've got a few books on Amazon.com that you can reach about different parts about business building and whatnot. But if you're a syndicator or investor, I highly encourage you to pull out your phone. You can pause the video. You can scan this QR code right here, and that goes to the FAQs page of 506BME, which is the platform where I offer the IT services of making sure you have the documentation for your 506B compliance. The idea being is if you drop your laptop into the bathtub, well, the SEC is still going to need the documentation of that substantive relationship to prove that you weren't publicly soliciting people. And so that's something that I'm happy to take off of people's hands. And the neat little benefit that I have on top there is I have a way of really attacking plausible deniability. A lot of people's systems still leave that door open in my view, but I'm not an attorney or whatever. But Mike, if people want to reach out to you, I know you're active on social media as well, but website, phone, email, what are the best ways to reach out?
Sure, you bet. I am pretty active on social media. You can always reach out to me, connect with me on LinkedIn, Facebook, Instagram, pretty much all the programs. But probably the best way, though, is going actually directly to my website, which is growcaptoday.com. And there you can actually, you can download some free ebooks that I have. You can get a lot of information. You can see some of my portfolio. You can actually even schedule a call with me directly from my website, and sets up a automatic call via Zoom or phone through my Calendly link. And I always like that.
Perfect. And that brings us to the last part. It's actually not for you, Mike. It's for you in the audience. It's my public service announcement. If you've been watching this episode and experiencing like searing pains in your eyeballs, like migraine-like symptoms, I'm confident it's due to the downright hideous subscribe button that's just down there. And you can get rid of it for free. You just like do that. You click the thing and it just does it. And full disclosure, the reason why I want people to click on it is because if enough people do, then YouTube will actually start to pay for these videos instead of me. And I think that would be amazing. But of course, I should tell you the drawbacks or the trade-offs and what it is that if people hit subscribe, it means my videos may show up on your list of suggestions. But quite frankly, you can go ahead and ignore those suggestions because I just really appreciate the fact that you spent this time with me. Just like Mike, I appreciate you joining me today. This has been great.
Thank you, Dan. You've made it entertaining and fun. I love that.
Awesome. Thanks, man. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506B or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.